Hey there. All right. Really excited to jump into this. A lot of you have been somewhat interested, at least, in my strategic trading strategy, which is something that I help those who are interested in the acquisition HOCO program implement into their special purpose vehicles. I call it strategic trading because it's about creating situations where you're just in a high win scenario. So, a lot of people don't realize like you can literally look and see when you're making a trade by looking at what they call the Greeks, the delta and theta. You can figure out what your win rate is going to be. And there's some platforms that will straight up just tell you, like, hey, with this trade, you have a chance of winning at a 90% win rate. So obviously, when you can do strategic trades that have a 90% win rate, maybe you don't have these like skyrocketing returns, but you're just in a much better situation than where a lot of people are when 95% of traders actually lose money. So I think, this strategy that we're going to talk about today is something that you can implement into your company. You can increase the cash flow that you're generating. You can take that cash flow and reinvest in other things. And basically, in my very humble opinion, it's one of the most reliable and effective methods to enhancing your company's income. So, with that, let's dive in and just uncover kind of the foundation and principles that I think can lead to just this additional source of income for you. The first thing I think that's important to emphasize is strategic thinking when it comes to how you do these deals. When I'm putting together a trade, I'm not just thinking about like, oh, what's going to happen with this stock today. I'm thinking long term. I'm thinking, 2 months out, what do I want this trade to look like? We're focus on basically selling options. And when you're selling an option, you're basically making a contract with someone else that you're going to do something in the future. And based on what you have to do in the future, you want to decide like, what do I want my portfolio to look like? And that's going to help you decide. So I think one of the things that makes this a lot different is when you're talking to a lot of people, they think about trading in the sense of very short term speculative trades. And it's not to say that some of these can't be speculative, but we're not talking day trading. I don't want. I don't have time. I wish I could just sit. I enjoy trading, so if I had the time, I would sit at a computer and look at a screen like more of the day. But I'm out, the day, multiple meetings, doing deals because that's my main income. But this is a great additional source. So what this enables you to do when you're implementing kind of these strategic trading strategies, and we're going to talk about one of them today, is take a very, very calculated approach. I want you to utilize it so you have an opportunity to generate very consistent income, and the most important part of this is I'm always thinking about mitigating risks. This year's been really incredible, really amazing. But even as things have been skyrocketing and returns have been absolutely unreal, I've always done every trade with like the risk in mind. And so, what you want to create is kind of a well rounded strategy and technique that is not just lucrative, but also prudent. Prudency is key. So let's talk about the mechanics here. So when you dive into the mechanics of strategic trades, um, the most important part is I want you to focus on bolstering your income. When you're engaging in the strategy, the first step is selling a put for me. So I am selling a put, which basically obligates me to buy the stock at a certain price. So let me break this down step by step, and I'll kind of break down an example so you get some clarity. So imagine you come across a stock and you genuinely want it, you believe in the stock, you feel like it has long-term potential, or it's even undervalued and will be at a higher value later. So let's say that the stock is currently trading at $25, and you have the conviction that it would be a very compelling investment at 20. So you like it at 25, but you'd like to buy it at 20. Well, here's where strategic trading comes into play for your special purpose vehicle. Instead of buying that stock outright, and one of the things that is important here is even if you have money that's laying around, and I'm guilty of this in different companies, but when you have money that's laying around, the first thing to understand is that you're losing money, right? So through inflation, you're literally losing money. It's great, inflation is getting under control, but no matter what, there's always some level of inflation. So we don't want money just sitting there, and so we want to get that invested. But if we're going to get that invested, why not? Number one, have the opportunity to buy that stock at a discount, but also be able to make income into our entity, um, to buy that company at a discount. So when you sell that put option, you can sell it with what's called a strike price of $20. By doing this trade, you're essentially entering a contract. You're creating an agreement. And the agreement is if that stock falls below $20, you commit to purchasing it at the predetermined price, which for you was 20. So if it dropped down to 19, you're still buying it at 20. The most important part of this is that you wanted to buy it at 25. You liked it at 25. So if it does go 19, your long-term position is that the value is going to go higher than the 20. Now, the most exciting part is almost like an insurance company. You're receiving a premium for selling that option that is your income. Now, one of the things that put me onto this strategy, which I mentioned before, was seeing, I'm an investor in Berkshire Hathaway. And years ago, I went to one of the meetings because I wanted to make sure that I saw Warren Buffett and Charlie Munger in person before they passed away. And so I go there and, I'm learning more and more about the business. And one of the things that they talked about that year was this strategy. And that year they generated billions of dollars with this exact strategy, literally selling these put options. And as you know, Warren Buffett has an acquisition holding company. And so whenever you're in something, you should try to follow the biggest and the best. And that's why it's so crucial. Like there are a lot of people that are focused on buying businesses, but if you're going to buy businesses, then there are two ways to do it. One is through private equity funds, and the other is through acquisition holdcos. And the only people that are billionaires that buy businesses are those two, do it through those two types of entities. So back to this example trade. What does receiving the premium, what does being able to buy the stock at a discount of where you think its value is mean for your probability of success? Well, this is one of the things that we go into in Patreon, and I love just being able to share some of the actual trades that I do in the actual businesses, so that other people can see my thinking. And it's all about probability. This is not, just looking at a graph, trying to make a trade, waiting for the next tick, and hoping that it's in the direction that you desire it to go. In this case, we're really focused on probability. So let's break that down. When you sell a put option, your likelihood of profiting is just inherently, by the nature of the trade, higher than other forms of trading. So let's break this down just logically. Since you genuinely, first of all, desire to own the stock at the price that you sold that put at, the worst case scenario is you're buying it lower than where it is right now because you've sold that put at a lower price. And you've already deemed the price that you're selling that option at to be attractive. So your probability of success becomes really, really high because you're only going to buy it if it's at or below that price, the price that you want to buy it at, right? So the premiums that you collect um, can be substantial. And the thing that I love is that, unlike other businesses, if you started a business today and you wanted to sell a product, you've got to create the platform, you've got to drive some traffic, you've got to have some compelling copy, you've got to convince people to give you the money for that, and then they sell that product for you. The really cool thing about these is it's almost like an insurance product. It's one of the reasons that Warren Buffett loves it. Is he loves insurance businesses, and we're basically becoming an insurance company, selling that premium to somebody else that wants to kind of protect their downsides. They pay us that money up front. It's basically akin to receiving a payment for simply being open to acquiring the stock that you believe in. Now, this is just the first part, and I don't want to get too deep because I know this is something we hadn't talked about. So I wanted to make this video, and I want to get a sense of your questions, your thoughts, and your interest. And I'll start to do a series, especially as we lead up to in the Patreon. We've got a big training that we're going to break down just this whole process and strategy so that you can implement it in any business you require, but you can also implement it individually to create this long-term income. And it's very, very powerful. The people on the Patreon get to see how much money I'm making. I won't even go into it, but let's just say, it's not unreasonable for you to be making 20, 30,000 a year from this strategy. So if you're really interested in this, definitely check out the Patreon. But if you want to follow along, let me know in the comments if this is something that you're interested in. And if not, I won't go more into it. So like the video. If you're not subscribe, hit the notification, and let me know if you want me to go deeper into how I buy companies and increase the not only income, we'll talk later about increasing the valuation at exit by implementing this whole process of strategic trading. Thanks.